respect to subsequent accounting procedures which we are going to follow. So this is the seventh chapter. We call it as origin of transaction, source document and preparation of vouchers. You may have heard of the term vouchers many a times, but it's an understanding with
Vouchers.
respect
You
to
may have
the
heard of the
principle of
term
accounting.
vouchers
We will
many a
understand
times,
it
but
today.
it's an
The learning
understanding with
objective of this
respect. You may have
particular
heard
chapter
the
is
term
going to
vouchers
be
many a
source document. You will understand what is source document, meaning of vouchers, type of vouchers, source vouchers or supporting vouchers, what are they, accounting vouchers, preparation of voucher. So these are the understanding which you are going to have it today. In order to make you understand further, I'll give you a premise so that you will be able to understand it thoroughly. Let us see what is that. Let's say an organization by name ORG. This is an organization which does a business, maybe a stationery business. Now this businessman, there are some staff, there are certain departments in the organization. It's a big stationery firm, so it has staff. Maybe there are sales staff or sales department, there is human resource department, there is also marketing department which is engaged in promotion, operation department, and there is an accounts department. All right, so which is very likely in a bigger scale firm you happen to see these departments prevail there, or there may be some more departments as well. Now in this particular organization or a firm, lot many day-to-day transactions, business transactions happen. Now what are these business transactions? So we have sales department, they are into selling the product in the market. So these sales department, they often go to the market, they also claim certain advances in terms of money in order to meet the day-to-day expenses. They do selling, there may be cash sales or there may be credit sales. There is operation department which also happens to incur expenditure in terms of wages paid or organizing certain events or day-to-day activities. HR department also engages itself in training the department, training the employees and related aspects which are there. Then we have marketing department which also does certain important activities which is branding, promotion. Now why I am referring to these is because of the fact that when there are something or they are receiving some, all right? So if there is payment done or receiving done, which is a transaction. Now these transactions, if there are so many activities happening in a day and there is a payment going out or receipts coming in the business, this in order to manage this payment and receipt, the accounts department needs to follow an structured procedure. Then only it is able to take up everything associated related in terms of payments and receipts in an effective way. The processes or documents are to be important basis which the subsequent transaction entries can be made in the books of account. Now the question is that whatever we have studied so far and whatever we are going to study further, these are essentials which are required to be done in order to do accounting effectively, purposefully, and it meets the objective of external and internal users. Now how to make this practice effectively? There are processes to be followed, and what are they? One of the most important process is the vouchering or document. So there are documents, because we know that entries can only be made in the books of account basis the evidences. Unless the evidences are established, entries cannot be made. So it is very important to understand this, that the evidences are important and the documents which are submitted along with the details of the transactions which stands as evidence for the transaction. Now what are these evidences? There is one source document, we call it, basis which the entries are made. Let us understand what are these source documents. An evidence of a transaction or an event may be cash memo. So whenever let's say an enterprise ABC firm sends its employee to buy something from the market, let's say stationery from the market. Now this stationery shop, after having bought certain stationery item, cash is paid by the employee to the stationery shop owner. Now, in turn, stationery shop owner hands over a cash memo which has certain details of cash memo number he puts in, date, then there are serial number or and the item correspondingly the items are written there. Then comes which all items he has bought here, everything is written, the count, then the rate and the total amount, and against which how much of cash. If supposingly this is 1000 rupees, so there is a cash rupees 1000 received, and this is made in terms of cash or maybe even check as well. So whatever it is, accordingly it is required to be mentioned, and there is a signature of the seller, and this is the firm to whom it has been sold is written here, and then this stands as a proof for the accountant of this stationery shop ABC firm to enter subsequently in the books of account after having verified the cash memo. The cash memo is the document which is given by the seller to the buyer stating the cash which he has received against the sales and the description of the sales quantity and other details mentioned there. The accountant of or the firm enters in the books of account, or the accountant enters in the books of account on behalf of the firm. This is understood. Cash memo which is given by the seller to the buyer, and payment is made in cash or check. Invoice. Now, if there is a credit sale, it is not only cash sale that happens in an organization, there are credit sales as well. So if there are credit sales done along with the selling, supposingly 10 books are sold by ABC firm to, let's say, XYZ organization. Now 10 books which are sold. Now this is books, these are books. So books sold on credit as per the agreed term, the payment will be made by the XYZ to the seller. So let's say till then, he along with the books, he sends the invoices. Okay, invoice. Now these two are sent to XYZ firm, and basis which the invoice which is seller who submits it to the buyer, the recordings are made in the books of accounts. So in the buyer's book, the basis, the invoice, he will enter, the accountant will enter in the books of account. Now, how is this the format of an invoice? So this is the name of the firm, the supplier, then to whom it is sold, the buyer's name is mentioned there, address is mentioned, what all books which have been sold at what price per unit, and the total amount which is to be paid. There is CGST and state GST. This we will study in the subsequent chapter, which is also taxation is also added to it, and this is the amount which is to be paid. So this is the invoice which has been raised by the seller to the buyer. Buyer's book will enter basis this invoice which is shared, and accordingly there is a transaction which has happened and records are maintained. I hope this is clear. Now, so we have understood cash memo, we have understood invoices. Now let's say receipt. Now, when receipts are issued, so when cash or check is received from a customer, a receipt of for the amount received is issued. So when a cash is received, there is a receipt. Supposingly, if we have sold goods to XYZ, after some time or as per the agreed term, he has paid us the cash or check. For the payment which is made by the buyer on a later date, on that particular day on which the payment is being received, the accountant enters in the books of account, after having issued a receipt for the payment which he has received. When cash or check is received from a customer, a receipt for that amount is issued so that it becomes a proof of transaction, and subsequent entries are made in the books of account. I hope this is clear. Now let us see what are details which are there in the receipt. So received with thanks from Rahul Sharma, sum of rupees this much, amount in words as well. It's a normal practice of entering the amount as well. Purchase of what items that we have purchased, whether it is cash. If it is cash, then fine. If it is check, then write the details of the check number, and then accordingly it is signed and then given to the person who is making the payment, or the buyer who has bought on credit, now paying the making the payment. I hope this is clear. Now pay in slip. You must have visited bank. So there is a customer who visits a bank. Now there is a bank. Now whenever the transaction happens between a customer and a bank, there are you must have seen on the counters of a bank lot many slips which are kept there for any particular transaction which you are to make with the bank. A corresponding slip is required to be filled as per the norms, and then the transaction can take place, so executed. So this is important. So when you are paying in, depositing money, cash or check in the bank, then that particular slip, there is a specific slip, what we call it as paying slip, which is required to be filled as per the format mentioned there, and then it is submitted along with the cash or check in order to get the credit done. Usually if it is check, it is Dropbox. If it is cash, it is deposited directly to the account. So how is the format of a pay? This there amount there is because the conditions mentioned as so 100 and 500, so all directly in the bank is on, then there are account and holding is there whose name it represents. This will happen after the back of the page mentioned there. So that case the discrepancy subsequently, and this can be further met in there. Let's check if you have like there is to whose name ABC station owners. So this is then this is when doing a check of this company, there are two ways. One is the check is one you have on the applicable, and also the check for this clear. So and signature is also written here. This is check should, and the specimen has to have the number for any reference can be used. I hope it is clear. Now there is a debit note. Now what is debit note? You must have heard of debit is a debt raised in name, then it means say there is a buyer and there is a buyer who has bought from the city. Suppose if they were sold to buyers books, out of these six reach to buyers list of their or maybe somehow the water or rain version the position to read. So he informs the seller that the books were not packed properly. Recently they are dying of these books, say 204, just when they are changed by the buyer and the seller. So he credits seller for the rule of accounting. He credits the seller because then he is liability. So the subject is to be created. He credits the seller. Now 200 out of the total purchase, buyer is claiming that two books not as per the station proper condition. He says therefore 100 rupees is required to debit the buyer debit note to the seller mentioning that such and such are damaged not sell. Therefore this much amount of is made in the books effect, but the necessary adjustments are also made in the books supplier. Therefore the amount to the extent of it should get reduced and the liability of the supplier either reduced from a whole. Say if it was 10,000 rupees of books which was bought, out of 200 rupees of debit by the seller, the final amount to pay is 9 in the whole because 200 rupees of debit we need to buy the buyer. And how is now the debit note appear? So it has these particulars mentioned quantity amount, how much of how many books, and how number of books, duration, and every details which are defined and sent to the seller. Also does LLC. I hope this is clear. This is the debit. Now comes the credit note. Just reverse the condition. Supposing we are buying the seller. So we have bought goods from about 1,000. Okay. There is raise an invoice of rupees only